Hi, this is Randy Finney with Right Side of the Chart, and this is a midday to late session update for Thursday, August 29th, 2019. It is 2:48 p.m. Eastern Time as I'm starting this video, and I wanted to get this one out as I've done recently before the close, just mainly because the markets are in this trading range, and there's a lot. Things can move quick. Even within the range that we've been in, we've seen a lot of movement. So sometimes, like I said, I'll try to get either a post if there's anything significant going on that day. I'll try to get a post with some charts out, as I just did, by the way. Just published one. A lot of that I'm going to go over in this video. For example, I made mention to in that post, but I didn't include a chart. It took long enough to get that post together, get all those charts mocked up, and get it out to you guys. So that's why I do this video, to kind of follow up with that. And in there, I mentioned a bearish engulfing candle. That's a big bearish engulfing candle, and you see the doji right there. So that's a potential topping stick. It could have longer-term bearish implications. Now, you could tell from that last post, if you read it, there are cross currents, and I have mixed thoughts on this. And that is, the short on the metals and treasuries, those flight to safety assets, which have been bid up to pretty extreme levels. I'm longer term bullish, make no mistake about it, on treasuries and gold and silver and all that. But near term, they've certainly gotten ahead of themselves. Extreme overbought conditions, and of course now this sell signal here on the daily chart. Let's zoom down, look at the 60-minute chart. This was, I believe, the same chart I posted last night. We had a high-level bearish PPO crossover pending. Now that's confirmed. That's right here. You see that bearish PPO crossover. This was the last high-level one, but the trend was strong here. And silver had been, and gold, defying divergences, things like that. But this looks more like a blow-off top, this recent run-up here recently. And you can see, of course, the volume, big volume. And more importantly, see back then, and I often talk about the difference of a trade setup and a actionable trade. For example, right here we had a trend line. It never broke down, never even gave you a buy signal. We had the divergence and all that, but we never broke trend. So there was no reason to short SIL back there, SLV. This is the silver ETF. This one, there was a sell signal, and it did play out for a little small short trade, but like I said, corrected mostly in time. So anyways, I just wanted to update that, and again, cover that, show you guys that bearish engulfing on the daily chart. So, and as I said in there, the shorts on the metals, for example, gold and silver, although it would certainly help if the stock market continued to rally, it would certainly help those trades. That's not necessary. The stock market, I believe, can fall and have the metals fall, because we've seen them both rise recently, where there was a big bid, throughout most of the year. You can see the metals rallying, and the stock market, throughout a good part of that was still moving up as well. So although there is typically an inverse correlation, meaning one goes up, the other goes down, because gold and silver are flight to safety instruments, it is not absolutely necessary. And so, as I told you guys, and please remember, my positioning can and often does change quickly, especially in my active trading account. Swing shorts sitting on tight on for now. There's nothing's changed significantly in the technicals. I'll get to the broad markets here in a second, but as of now, we're still within the August trading ranges, still below the top of those ranges. So here's what gold looks like here. Remember, on gold we did have divergence, negative divergence right there. We didn't have it so much, or we had RSI, I think, divergence on silver. So this is what gold looks like right here with a divergent high. And again, if the market rallies, if it takes out not just today's highs, but takes out the top of the August high, the August trading range, and takes it out with conviction. That means not a little pop above that's then faded that day or the next day. That would be a false breakout or failed breakout. Talking a breakout, impulsive buying, and we continue to move higher. If that happens, there is a lot of hot air that could come out of these flight to safety trades, and I already gave you the targets yesterday, so let me not spend too much time on that. And here's silver. Doesn't get much better than this as far as a breakdown. I talk about some of the criteria and things you look for in a breakdown, one of those being an impulsive move. Well, if you looked it up in the dictionary, if they had a trader's dictionary, that they'd probably have a picture of this under the page of an or under the definition of an impulsive breakdown. So there it is. That's 60-minute chart. And like I said, it looked likely yesterday, and that's why I had mentioned, I jumped the gun on it and took a position before the breakdown. And you know what, that position, it was stopped out, and then I re-entered right back into it today when I saw the futures moving up. So the one I took yesterday did get clipped and then back in at a slightly lower cost, but still before the breakdown. And then the breakdown came, and that's been a nice trade so far. And you can see this chart level here, I added the 18105 support level just before we hit it, and we hit that today. And you'd have to zoom in a little bit, and you can see we bounced there. Boom. Yeah, it's the scenario I had drawn out in the trading room. Here, that was in this chart here. So we're coming down there. So, silver's en route to T1 with an impulsive break today. I've added one additional target right here, 1805. Get a little bounce there and then continue down. And as I showed you on the chart I put on the front page, we had a nice little bear flag. Let me see if I can show you that here on the my 1 or 2 minute charts. Yeah, right here. This was that flag I posted on that right there. So not wrong tool, clear that out. You can see the flag. So some of these bear flags play out, sometimes they don't. And I threw the caution out there. Wow, I'm having a hard time grabbing a line tool here. Let's see, grab a line tool and show you this is what the flag would look like. And you have the flagpole, the impulsive move leading down. We have an impulsive break so far. Sometimes you get usually it's not ideal to see a second flag. And again, this is going to be contingent on the markets, largely contingent. If we see an impulsive move down, it'll be because the markets break out. Now the markets, let's talk about those for a second. Let me move this down a little bit if I can do that. Let's go like this. On a larger monitor here, and so there's those levels that I posted on that front page post that I did just before this video. You can see we had these highs. I'm not drawing these lines perfect, but there they are. This is where all the you're looking from left to right, ES, NQ, and RTY. These are streaming 1 minute charts, and so there's that pop so far. I told you in that post that I favored a false breakout. We were pushing against them all day, especially this. Look at all these reactions. We had reactions, 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 boom, a little pop above, reactions, reactions. We're pushing there. And so far ES, or this is RTY, so far RTY is holding up, but not an impulsive breakout. In other words, here, draw the lines again like that. And an impulsive breakout, and that's why I really, probably sounds a little bit reckless, but I have very little fear. When I reversed long to short earlier today and been that way all day, because I think there's very little upside today. We've already spent a lot of fuel, as I said, to get there. NQ was up 1.5%. Right. Well, now it was up better than I think 1.8% or so at the highs. And so, I just didn't see a 3% rally today in the markets. It is possible. Now there's an hour to go. Maybe we repower back up, but so far they popped those highs, the previous highs, and they failed it, and they're back below there right now. So I would love to see this because I still have the swing shorts on, and it's where I think the longer term charts tell me we're going down. I don't like the fact we've come this close back to the top of the trading ranges, but hey, we haven't taken them out yet. So we'll just have to see which way this one goes. That's what I'm favoring. It would be great if it comes today. If it doesn't come today, maybe it comes tomorrow. And then let's look at the index charts, and we'll wrap this up. Let's look at the 60-minute charts. Okay, here's QQQ, and you can see, just again a slight pop, and here's that same level I was talking to you about this morning when I did the video, 188.37. Look at that. Boom, 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 hitting it. We just can't get above. So that's really that 1 minute chart as I zeroed in just a second ago on the futures. You can see it's the same thing. We've been pushing. Now, that's building up energy. It's going to go one way or the other. So here's the thing. By the time I do this video, if we break out and we start to run, and if we do, we run into the close, we could run all the way up there. What did I tell you earlier today? Another 0.5%? Yeah, 0.5% or so. Certainly a possibility. So at this point, they make another run at the highs. They might pop it, and therefore I might just reverse and go long for right in the close. Trail stops up, or at the very least maybe close the short trades out my active trading account. But can go either way. And I just want to point out these levels so you guys can watch those and then react appropriately. But if we do get a failure here, as I say, fewer things are more bearish than a failed breakout. So we broke this trend line, at least on QQQ, not by a lot, but to come back down in there, and let's say we go in and pull back, fall back down to that 186 level, especially if we do it impulsively, or even better if we backfill the gap, that's going to be a pretty big red candle, and that's usually how these rejections start from the top. This one you don't see red here because it's a big gap. That's even more damaging to the longs than a red candle. Why? Because if you have a red candle, that gave longs plenty of opportunities to stop out, and it also gave shorts, or what I call wannabe shorts, those that, yeah, they probably knew they should have shorted the top there, but they didn't want to. The price action was just too bullish the day before, so the wannabe shorts were left behind. That's what gaps do, and it tends to be good for the downside scenario, because the fewer shorts you have, the bigger the drop. You have fewer shorts to cover. So it didn't prove well. We did have quite a bit more downside there, but again, I just wanted to point that out, that that has been the MO. The modus operandi has been come up to this level, and when we get rejected, it has been impulsive each and every time. We're not exactly there yet, but here we were rejected there before. We were rejected right there at that time, and it would almost be too simple. I'll tell you what, too many eyes are going to be looking for another move to 189.40. So if we get it, I would put high odds. If we get up anywhere close to it, we're going to pop it, whether it proves to be the real deal or my preferred scenario fake out. But here's what I'm preferring right now. This is what I want to see. That's what I'm positioned for today. And again, it's not going to inflict much pain on me if we go up another 0.5% and get there. But as I said, if we go up there, we're probably going to keep going through there. And not today, probably happen tomorrow if it does. And so therefore, that's why I might just cover, stand aside, maybe even try to trail it up long. We'll see. That's just active trading stuff. I'll have to see how much time, and I'm going to cut out of here just before the close today, so if I do a market wrap, it'll be a little later today, maybe after 5:30 or so. And there's what it looks like on SPY. That was just QQQ we're looking at. Here's SPY. There's your downtrend line. There's the breakout. Will it prove to be a fake out? I would like to see nothing more. Obviously, that's the selfish part of me talking, as I'm positioned, short and net short the markets and all my accounts now. And look, if I'm wrong, thing is, there's not much more pain to be inflicted. We're going to see, we start taking out these levels at 294 level. And again, well, how does it look if we break out? Are we very stretched, overbought when we get there? Are there divergences? If so, then that would give us a high probability that it'll be a fake out. However, it could look like this, and these are, there's a lot of, that's why I do these updates each and every day. The markets are dynamic, and so is my analysis. It changes every day. So let's say we come back test, right? Here's one example, one of millions, or many, I should say, not millions, but one of many possible scenarios coming back test. Or maybe we even come back and hit that 289.90-ish level, and then power up, or even consolidate for a while. What that would do, it would work off these oversold conditions. Remember this morning when I covered the NQ and ES, and I showed you one reason that I really wasn't that afraid to be short, to reverse to short on this pop-up today. Is this, just go back in time, especially since this downtrend has started, and look what happened each time we were oversold. I'll take those odds all day long. Like I said, there's no certainties, but best we maybe consolidate a little and then push up. Maybe we do something like this, get a divergent high. But that's that. Overbought at resistance. Even we're actually above it, and that's why I'm not a buy the book trader. Some traders are, well, no, only trade price, not what you think's going to happen. To me, that's hogwash, or at least it doesn't work for me. This is a breakout, so. Some see it as such, and therefore if you just mechanically trade, and you don't second guess the charts, then you're long right now. You took this as a long, and it may work for you. But like I said, some breakouts I take, and some I stand aside, and others, if I think they're going to fail, I'll actually take the opposite side of everyone else on that trade, and I'll short it, looking for a false breakout. In fact, we already, after the open, we did have a pullback earlier today, and you can see, since I did that first video, 76.51 60 was my support level. That's exactly where we hit too on the pullback. That was a support level that was already on the chart, or close enough to it. So let me wrap it up here and get this out to you guys. Again, I know, things are changing, and I, my thoughts and positioning are seesawing day to day, and that is, again, just trying to read the tea leaves and then adjust accordingly. Like I said, I got lucky. I didn't expect the big up. The only reason I covered the shorts I went home with, again, because we had a nice swoon down. You wouldn't see it on this chart. You'd see it on the 1 and 2 minute charts, and therefore I was expecting a mean reversion. We had fallen down to support, so then I reversed that. Figured we'd at least go flat or slightly higher, but I got this little gift from China, and again, that's time to hopefully position for the next leg down. All right, I'll wrap it up here and get this out to you guys. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it, and best of luck on your